Welcome back. You're watching Big Deal. So, Ananth, taking off from where we left in the last segment, which is one of the most recent successful deals in your view, and why?
So we ended last segment with the services segment. So let's talk about that. You had the iGate Putney deal. Apex was an investor in iGate. And, they invested, I think it was 2011, a little over $300 million, and eventually ended selling out to Capgemini in, 4 years later at a much bigger valuation, $1.1 or $1.2 billion. So it was a very interesting deal, a case of where a private equity player came in, added value in terms of the management approach, in terms of giving them more focus on the sales side, and helped them expand inorganically, and eventually ended up exiting. I think that was a very well constructed transaction and ended up very well for all stakeholders.
All right. And what do you think makes for a successful deal making?
I would say alignment of stakeholder interest, and it's a very broad statement when I say that. But the first thing is the two principals on both sides need to agree that it makes sense. Hostile situations are never sort of conducive to good deal making. There are hostile deals, but having said that, it's not necessarily conducive to good deal making. And a clear understanding of synergies. Now, you can fall into the synergy trap. There are many cases where people have done Excel spreadsheets of synergies and these have really fallen away, but not falling into the synergy trap. And finally, I'd say evaluation or an exchange ratio on a deal which is justifiable to parties. It looks, looks all right. It doesn't look egregious. These, I think, would qualify for a good deal.
And how much of a value does a deal maker, an investment banker, really bring to the table? Because a lot of times, if it's a principal-to-principal talk, the companies have decided. But what is the important role that an investment banker can really play?
It's an interesting question. If you take companies today, a number of companies have actually hired investment bankers. Take a company like Alibaba. Alibaba has got 80 investment bankers working for them.
You don't want to talk about the Indian companies like Birla Group and Tata Group as well.
Yes,
but yeah, that's a recent trend that we are seeing. So besides that,
but the real role is in we add limited value in terms of providing, helping them understand their industry. They know their industry extremely well. They can run the synergies and the numbers very well. That's very, very clear. Where we can help is in connect the relationship and giving them a perspective of what is driving the other side to do a deal. That's a huge value. The second really is the soft side, which is in the negotiations. We've often seen deals where, there's a deal which is started and two principals decide to talk to each other. More often than not, when two principals talk to each other, there is no deal, right? And because there's no turning back, and egos come into play. And that's where a banker can step in, be the good guy or the bad guy, and really facilitate that and help sort of come to a meeting point in deal making. And I think that will continue for a long, long time, irrespective of what happens to AI and other parts of banking.
All right. So the requirement of investment banking is here to stay, and you also think that this particular profession will be remunerative, at least in the recent time, with the kind of deal flow that we are seeing currently.
I would hope so.
All right. We'll wait and see how many deals really fructify, but this is a very bad week to talk about deal making and the consummations because of the failures, but we'll see how these hurdles are really crossed by the deal street as well. Ananth, thanks so much for joining us on Big Deal on CNBC TV 18.
Thank you, Nisha, for having me on the show.
Thank you. So with that, it's a wrap on this special edition of Big Deal. Thank you so much for joining us.